Hello, 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 family. Welcome everybody to our market recap this month. We're going to be looking at all the activities of what's happening in the market this month. I'm joined by my good friend, my brother from another mother, all the way joining us from the UK, Ali Rupani. Ali, how are you doing, brother?
I'm good, bud. Yourself? What were you jamming to before we came on?
The team was working on that. In fact, now that you've asked, I'll play it for you here.
Was that, buddy? Black coffee?
Yeah. This is what it was.
Cool.
It was just to set you and I up, make sure that you and I are in the right space.
As always, my friend. How are you? Good?
I'm blessed, brother. I'm blessed. I feel good. I'm strong. I'm putting food on the table. You know, all the work's happening behind the scenes. How about things on your side? How you doing?
All good, man. I was in Cyprus last week, down in HQ. Everyone sends the regards. Excellent. All looking very, very positive and strong. So we're looking forward to seeing you sometime soon down there.
What's happening in Cyprus, by the way?
Listen, man, Cyprus is hot. That's for sure. And, you know, look, I'm Kenyan, right? But, you know, coming from London, you know, anything above 25 degrees, and I start to struggle a bit. But, look, the island's doing well. You know, obviously been a difficult 2.5 years. So, you know, good to see that vibe back and people back. And obviously the airports are busy. But saying that coming back to Heathrow was very painful. Very, very painful. But I'm sure we'll touch on it as the call goes on. But I think we had a good shout last time, right? I mean, a lot of the stuff that we discussed played out.
I feel, sorry to interrupt you, but I feel a bit like you're an oracle because a lot of what you called out is exactly what played out in the markets.
Look, I think I'll be honest I don't think it's about being an oracle, but I think it's just about putting things together and sort of realizing actually this may play out. What I didn't think would happen was that a lot of it would play out that quickly, right? Mm-hmm. And obviously, you know, that sort of compressed June, you know, it just felt that everything that we sort of discussed and, you know, happy to sort of go through the key highlights, but most of it seemed.
But tell me what's happening with the dollar, right? Because I saw, the dollar seems to be, it's found its second wind now. What's going on?
So let's do this, right? Let's go through a June review, okay, of what I think were sort of the key points.
Sure.
And, you know, we can sort of touch base with, you know, what we discussed last time around, and then we can sort of have a look at what I think is playing out now, right? But for me, look, I think June, you know, H1 this year, right? US bonds, US equities, right? We've shed $16 trillion year to date. Okay. Wow. So let's put that number into context.
$16 trillion.
$16 trillion. So that's 60% of US GDP, right? So that's in effect the largest wealth destruction in history, right? But it all seems to have happened quite orderly, right? So, you know, S&P West first half of the year since the 1970s. And I think it gives a clear indication of how this bear market might be setting up. So, you know, it started obviously with the China tech sell-off, right? Phase one. We saw that then pass through to the IPO stroke SPAC stroke meme space. And then obviously we saw bonds and duration getting hit. And then, you know, in June, we saw, you know, cryptos and DeFi, you know, bearing the brunt. And for me, I think that the next leg is going to be real estate and private markets. And obviously we touched on the private markets element last time around. So, you know, I think that's how I see sort of the next leg. And, you know, obviously it's not a systemic risk, right? It's sort of a central bank driven sort of, you know, putting the brakes and cooling this decade-long liquidity. And I think, you know, that doesn't mean that mistakes aren't going to happen. So look, I think it'll be orderly, but, you know, I think this is sort of how I see it playing through. You know, other things I think I noted in June were obviously corporate warnings, profit warnings, you know, targeted Intel very early on. We obviously had that very hawkish ECB. You know, we had UK and US inflation hit 40-year highs, whilst at the same time you saw consumer confidence hitting record lows in both those countries. You know, we touched on it last time around, you know, Shanghai, we saw renewed lockdowns from COVID. And obviously, I think that now seems to be easing a little bit. And I think, we'll speak about that a little bit later and what, President Xi sort of has on his agenda for the rest of the year for China. And then obviously we saw that sort of big move in crypto, right? So, Bitcoin hitting that 17,000 handle, the Celsius freezes. So, I think we saw a lot of this all happening in a very short period in June. Russia cutting gas supplies to Europe, Powell hiking 75 basis points, US mortgage rates increasing to 6%. And I think, the market is still recovering and sort of looking for, where next, where's the direction here now, right? And also some of the stuff that we touched on last time with regards to, maybe sort of heading towards the 1960s stroke 1970s socioeconomic unrest, right? I think, we've started to see that now in terms of, the popular vote for change, continues, right? So, in Colombia, we saw them elect the first leftist president in their history, Macron losing his majority in parliament. Biden's approval rating is now at 33%, which was below Trump's. Obviously Boris.
Wow.
Yep. I mean,
wow.
Boris lost both by-elections. And, the right wing in Italy won some of the local elections, right? So again, this whole sort of socioeconomic unrest that we thought may happen is also sort of, come to bear in June and in a very short period of time. And I think it probably continues. For me, I think looking at July, what's going to be key now is, again, inflation data, labor data, right? Because obviously the Fed is being driven by the market. And I think there's a discussion also there to be had, is it the Fed leading the market or is it the market leading the Fed, right? Sure. I think for me, it feels the market's leading the Fed, right? The Fed is been behind the curve over the past 12 to 18 months. And each time actually it's been the market that has jerked the Fed into reacting. And I now think where the market is pricing in and actually saying maybe we've done enough from a rate hiking perspective, Powell by the sounds of it is still happy to hike rates, right? And again, I think this needs to flip-flop. So if the Fed is going to lead the market, then I think maybe we get a softish landing. But I think still the Fed seems to be reacting to the market, which means, it could, still get a little bit ugly at some points. And I think that we still need to see how that sort of plays out. Obviously, Q2 earnings calls are going to be very interesting to see what that does from an equities perspective. I want to see what happens with regards to the natural gas flow into Europe after the Nord Stream maintenance work is done, I think around the 22nd of July, right? Because obviously that then starts sort of looking forward into the winter for Europe and, how does sort of, what does Russia do from a gas supply perspective? And that could seem to be a fairly opportune moment to not reconnect and start pumping gas. And then obviously that's a very tough winter for Europe coming up. I think from a politics perspective, I wouldn't be surprised to see Trump announce his candidacy for 2024.
Sure.
A UK cabinet reshuffle, Macron to maybe face a confidence vote, and obviously Biden to head to the Middle East. So I think there's going to be a lot happening in July. And on top of all of that, you have summer holidays, which means illiquidity, which means you can see sharp moves, right? So, I think we're really at the business end of the year, only halfway through, because a lot of this stuff, I think, is going to come to a head now. Look, on the positive side, I think that, China equities have been performing quite well. And obviously, we discussed this last time where if and when they sort of soften and it looks like they're softening their zero COVID policy, I think that could be very good. I think it was very, very worth noting that President Xi reiterated China's 5.5% growth target at the BRICS summit in June, right? So Q1 was 4.8%. So if he wants to hit the 5.5% for the year, that means that China needs to grow at 7.5% in the second half of the year, right? Which would be a real big boost, I think, for the global economy, if that is really what they intend on doing. And also, I think what could be very interesting is to see how Yellen's talks develop, where obviously, there is some suggestion that the US will look to drop tariffs on Chinese goods into the US in order to sort of, reduce the inflationary pressures that obviously, the supply hit has had. Right. So I think, that's a big positive I'm hoping will play through. And then into year end, I wouldn't be surprised to see a 5 to 10%. So for the second half of the year, a 5 to 10% squeeze, a bear market squeeze. I do expect a recession. And obviously that will probably be a global recession, outside of China. And, I think we could sort of see equities settle at somewhere between 10 to 20% below where we currently are. But I do expect it to be orderly. At least I hope it to be orderly. But I also do think, and as I said, flying into Heathrow last week, it felt very much the case where you're now seeing sort of the social unrest with the strikes, on the back of the cost of living crisis. And obviously, I hope it doesn't get nasty, but, we had tube strikes in the UK. We've got potential train strikes coming on. We've got ground crew at Heathrow sort of going on strike. So, I think that whole thing is obviously not going to help from a, economic activity perspective, but it does feel as all of that seems to be feeding through.
And all of that creates, as I hear it, a ton of opportunity. If you have a particular thesis and if you know how to play out that thesis. So here's my question for you, and takes us kind of to that next level. What you've done here is you've given us the macros, helped us understand an awful lot about what's happening at the macro level, what's happening politically. By the way, your political assessment is fascinating, so we'll jump into that in a minute. And then helped us understand geopolitically how all of these things play out as well. So, what moves on the left moves on the right. What happens in Russia, in particular the Russia and the gas to Europe situation, has a huge impact in what the growth story for Europe looks like. And then, of course, what the growth story for the rest of the world looks like, right? But the question I have for you is this. So you're in the market right now, and you're holding particular positions. Let's say the positions don't matter. Your perspective of the market into the near term, as I hear it, is prepare for a bearish market, right? How would you play that? What kind of asset classes would you be looking at?
Sure. So look, I mean, we've been happy to be long dollars, and I think this sort of touched on to sort of your question a little bit earlier, right? If the US is going through what the US is going through, imagine what the rest of the world is going through, right? Or potentially will go through. So I think in that sort of a notion, I'd always be happy to hold dollars, right? And obviously this is not investment advice. This is sort of, what my personal view is. And, at a point it becomes, what's the sort of the cleanest shirt of on a pile of dirty shirts, right? And I think, holding the US dollar in with that in mind is probably what I'd like to do, right? I think being defensive, so again, owning real assets, including equities, that you fundamentally understand, right? I think is going to be important, right? So none of the, and again, I know we touched on this in the last call, right? Where you're doing your work before you're putting on a trade to understand the risk that you're taking on, right? So really understand, especially in a market like this, and believe in the fundamentals of the trade you're putting on. So, I like equities, and I like equities that don't have the concentration of correlation risk as well, right? So I think that would be important. And I'd probably be happy to use options as well, right? So I'd rather be using options than say going one delta, i.e. just buying, the stock. So, that's the way I'd be sort of looking to do it. So 1, be defensive. 2, use options. 3, I'd try and avoid concentration and correlation risk. And then 4, obviously, as I said, I think the next leg down potentially is in the real estate / private asset space. And I'll probably be looking to avoid those.
I mean, we'll come to real estate, private assets, in particular, some of those illiquid assets in a moment, and what that's going to do, because as you mentioned, a lot of what happens in the financial markets effectively affects liquidity in the real economy, and then that has a bearing on pricing and in particular of illiquid private assets. But you said something now, and I see a comment here in the chat. Somebody says, what is a concentration and correlation risk? Please expand on that.
So by concentration and correlation risk is, in effect, having all your eggs in one basket, right? So, if you like 5 stocks, but they're all in the same space. I don't know, say, for example, automobile space, right? So vehicles, right? I wouldn't necessarily, or technology, I wouldn't necessarily own, say, for example, an old example, I wouldn't have all the FANGs, for example, in my basket right now, right? Because they're all concentration risk on tech and they're all highly correlated to each other. So, right. So if one goes down, it's highly likely that the rest will, and vice versa, right? So that's what I mean by concentration stroke correlation risk, right? And in this sort of a market, I definitely think you want to be avoiding that.
I saw this morning when I was reading, and I don't know if you're aware of it, but that there's been a state of emergency declared in Italy because of the impact of the drought. And the article came out of Bloomberg, but they were intimating that in part this has to do with what's been happening in the Russia-Ukraine crisis and that conflict, and how that has affected the general feed industry and a whole host of other things, right? So, and they were drawing some correlation then. But the article was interesting for me, and this is the reason I'm asking you this question, because in the article, the author of this article, Francisca, says that there was no estimation 3 months ago that the one would equal the other. In other words, that they had no way of foreseeing that this particular crisis would then conflate with a drought on this end, and that would have long-term effects on the other end. Of course, in effect, what they're saying is we're expecting fully that the price of crops, the price of maize, the price of wheat is going to go up in the world, because there's now an even greater reduction of these basic commodities. I noticed in your playbook, you spoke about long the dollar, equities avoiding correlation, non-concentration risk, et cetera. We spoke about illiquid private assets. And what is your view on the commodity space at the moment?
So look, my view hasn't changed from the last time we spoke, right? And there I said, I felt that, potentially going to commodity super cycle, right? And then you're going to say, well, you know what? If I'm looking at commodities price action since we last spoke, a lot of the commodities that we spoke about are a lot lower.
Yeah, they flat or down, yeah.
So look, that's fair, but my view is still, I am bullish commodities, because I think what you're now sort of seeing is, a combination of two things, right? I think that the best hedge versus inflation, right, has been oil historically, right? So I think in an environment where we see, significantly higher inflation, I think oil still performs well, right? I think when we look at the markets, right, commodity markets and commodity pricing is a lot better a gauge of what's happening right now, spot in the market, okay? And so I'm going to explain what the difference is, right? My feel is that financial markets, right, so equity markets, for example, are forward-looking, right? They're trying to price in what the market expects to happen in the future, okay? And I think the real gauge and feel of what's actually happening now can be better felt in the commodities markets, right? So where we've now seen, obviously, the massive inflationary pressures, we've seen the central banks hiking. As we discussed last time around, there's an element here of central banks looking to hike rates to reduce demand, which then corrects demand supply, right? Which then allows, hopefully, supply to come online to then reduce the inflationary impacts of what we've been seeing over the past 6 or 7 months, right? That is what the central bankers are trying to achieve, right? So when you see commodities prices coming off, that's because, well, maybe, I was in Cyprus last week, in a taxi, and the guy said to me, it cost me 60 euros to fill half a tank of diesel, right? He said several years before that, 7 years ago, he'd be filling the whole tank for 10 euros, right? So the demand side, that impact on demand is definitely being seen spot, which is why I think prices have come off, right? The commodity space, because people are reevaluating, am I going to go half tank, full tank? Do I want to add that? Do I need that lumber to build the extension to my house, or the, so, just in, they're now reassessing, am I going to go and do that spend, right? And they're not. And I think that's what's now being seen in the prices coming off spot in the commodities market, right? Versus what the equities markets are sort of trying to price. And I think what's going to happen now is you're going to sort of see, so oil's at what, 108, 110, right? I wouldn't still be surprised to see oil on a 140, 150 handle, right? Because actually what you see is that where we have the supply constraints, say from the grain side of things coming out of Ukraine, right? The realization is that, for example, when you're growing crops, fertilizer uses, sort of is made from oil, right? So from hydrocarbon in effect.
That's right,
right?
hydrocarbon.
So,
Yeah.
correct. So, right, so if you have high carbon prices, right? So oil, et cetera, then that's obviously necessarily going to feed into higher prices in your day-to-day life, right? So that's why I still think that commodities are likely to still go higher. As I said a little bit earlier, right? If China want to sort of achieve their 5.5% target that President Xi intimated in June, right? They need to grow at 7.5% for the second half of the year, right? So all of a sudden, and again, I think they could still be the buyer that pushes the needle significantly high in the commodity space. So I think, what I'm trying to say is either A, you're using commodities as an inflation hedge because it's been the best inflation hedge over time, or two, right, you will still see the big buyers of commodities because, China and others may still need to and want to undertake massive infrastructure projects to boost GDP growth and productivity.
That was going to be my next question, which is this. Over the past 10 years, I have been in, as many as you have, conferences where everybody talks about the future of the global economy. And over the past 10 years, Ali, that it has been impossible to have any conversation about the global economy, global capital markets, or the financial markets without having China somewhere in the conversation, right? And it doesn't matter where in the world you are, whether you're in LATAM or you're APAC or you're North America, everybody has to have a conversation around China. And one of the things I've noticed over the years is that conversation has either changed or matured. In other words, there were presumptions that were made very early on about what was feeding the China growth story. A lot of those presumptions, frankly, were based on bias, misinformation, and just a lack of facts. Over the years, as China has opened up, there's been a better understanding by global markets about what's actually driving the system of China. So here's the question I've got for you. On the one end, you go, prepare yourself for what looks to be a global recession on the horizon, a 5 to 10% bear market squeeze, your words, right? And on the other end, you go, but these guys in China are going, we're going to grow at 5% this year. What is the China formula that keeps feeding this growth engine that they've got? What are they doing that feeds that growth engine?
I mean, I'd probably say the fact that they have over 1 billion people in population, right? I mean, look, I think that's...
So do you estimate that it's consumption-led growth? Do you think it's infrastructure-led growth? Is it production to the rest of the world-led growth? Is it a combination of these? What do you think?
I think it's all three, both internal and external. Mm-hmm. So actually you have the best combination of factors at your disposal, right? Mm-hmm. Whether you're inwardly looking or outwardly looking. And in effect, that will only sort of get stronger in the years to come, would be my personal opinion. Mm-hmm. The only one thing I would say, and you probably have a better handle on this, and have probably been sort of a lot closer to some of the deals that have been done, say, on the continent, where, sometimes the strings attached that come with the, development agreements, the lending, the projects, now I think being felt, in various parts of the continent, and also other parts of the world, right? So I think maybe that external element reduces a little bit because I think, people are a little bit more aware of what to look out for when signing some of these deals, right? Mm-hmm. But then in effect, they can still do everything they need to do internally, right? And I honestly do think that, if they can hit that 6.5%, 7.5% for the second half of the year, right, I think that will definitely benefit the globe as a whole. And again, as I said, if we can get a reduction in tariffs of goods out of China into the US, right, I think that will also help significantly reduce the inflationary impacts that we've been seeing of late. right? So I think it's probably now more so than ever in our lifetime. I think it's very important the role that that China is hopefully going to play here.
We've got Q2 earnings coming up. Without giving, and you may if you want to, but without getting perhaps into the specificities around which company, which stock, and which sector you expect to perform how, at a general level, and I know you mentioned it earlier, what's your view about the earnings that we're going to see coming out of the Q2 season?
So look, I think they will definitely, well, not definitely, but my feeling will be that they're going to be softer across the board. Right. Which is still why I see, another 10 to 20% lower come year end across various indices. Right. So it does feel to me that they will be softer. Right. And again, this sort of goes back to what bankers are trying to achieve. Right. Which is, a slowdown in consumption stroke demand, which by the very nature of that would mean a slowdown in growth and earnings for corporates, right? So, it does feel as though they will be on the softer side. And I don't think the market is expecting any different, would be my feel, right? So actually, what you're now looking for is, the numbers that, perform to the upside and surprise the market, where you'll actually get some value in terms of, maybe sort of an uplift in the share price, right? But, expectations are now low enough where any upside surprise in performance will have an immediate upside performance in the performance of the share price.
Look, what an interesting time to be alive, right? As you know, complexity and chaos creates an opportunity for wealth creation. So, and anybody, what was that beautiful Warren Buffett expression? He said, it's only when kind of the tide recedes that you can see who was swimming naked, right? So it's and there is a lot of swimming naked about to be seen in this market. Right?
You tell me what are you looking at, man? This is your domain. Where are we going to make some money?
Well, let me put it to you this way. I was at this past weekend I was in Zambia.
Okay.
And had the phenomenal opportunity to be hosted at the State House in Zambia and taken around this beautiful kind of corridors. It tells the history of Zambia. This is where the president's residence and office is. Beautiful place. And the young man hosting us is a former private equity guy who has chosen to dedicate some of his life to giving back to his country. And he now sits as the special economic advisor to the president of Zambia. So the conversation comes up around the macros. And they've got massive growth targets, right, around what they want to do. But the baseline is that at the end of the day, they've got the same things and issues that they've got to deal with. They had a default, as you know, on a loan with the IMF. They've now had to go back and go, well, can we renegotiate the terms of these loans? But they've also had several instances of, let's say, difficult conversations and arrangements around loans that had become due with the Chinese state. Right. And having to bring the Chinese state to the conversation where they can renegotiate as equals is very difficult when you in effect have signed some of your state infrastructure as security for some of the loans that you. The reason I mention this is the following, is that the sense I'm getting, Ali, is that there is a rebasing in the economy of sorts, right? That rebasing creates space for new innovations, new businesses, new opportunities, but it also creates space for emerging economies. So a crazy, wild left example here is what the president of El Salvador is doing and his bet with Bitcoin. I mean, in my mind, that is a all or nothing strategy. I don't see that there's a, he's either going to get it really, really right, or like Michael Saylor, he's going to get it really, really wrong, right? And this is my comment about chaos and complexity creates opportunity for wealth creation. But for chaos and complexity to give you the opportunity, you've got to be a participant. You've got to be a player. So I suppose for the people watching this conversation, the question is, do you have a Squared account? Have you funded it? And are you trading? Right? Because you can only absorb as much information as you want. At the end of the day, you've got to be in the field of play to score goals. Right? In the words,
yes, yes, and yes. By the way,
in the words of Kobe Bryant, booze don't stop dunks. You can sit on the sidelines as much as you want, but at the end of the day, you have to make the decision to come into the market and play. Quick question I've got for you around your lived experience, and I want us to spend some time on the global political macros. And by the way, thank you for the summary you've done on the global political macros, because that, for me, helps put a lot of what seemed like erratic events in context. But just around the lived experience, there's a lot happening in the system and the society of the United Kingdom at the moment. The issues around the current administration and some of the challenges as it pertains to reputation and popularity that the current administration has seen. We only need to mention the party that happened at 10 Downing Street and what that had done for the image of this current administration. But also, there's now, it seems, a season of strikes that are happening, right? So there was the tube strike, there's stuff happening in Heathrow. From your perspective and as a person in London as we speak, what's actually happening on the ground?
So look, I mean, I'd probably sort of take a step back, right? I think, obviously, Brexit, the actual Brexit event happened 2 years ago, which coincided with obviously COVID, right? And I feel, my personal opinion is that we're only now actually feeling the effects of Brexit because we were relatively sheltered. And by that, I mean, the impact wasn't felt on a day-to-day perspective because we're all locked up at home in that sort of 2.5 year period, sort of thereafter the actual official date that the UK left, actually left the EU, right? So I think it's now being felt, right? Where, all of a sudden we don't have, the folk who were here from Europe sort of doing a lot of the stuff that they were doing, whether that be from a labor perspective or whether that be just from a participating in sort of the economy perspective, right? So I think that is only now being felt. And obviously, look, I think there's still an element of where people are sort of working between home and the office. So I think the effects are going to be felt and were definitely felt over that week when we had the tube strikes. I was at the Ed Sheeran concert on the Friday night, and I left the stadium probably around 11:30. So an hour and a half after the actual concert had finished, walked down Wembley Way. And because obviously we'd had the tube strikes from the day before, there wasn't enough capacity on the tubes, and half of Wembley Way was still full of people, right? And I think, it was a jovial atmosphere and people were sort of fairly happy to be there sort of singing away. But I think as this becomes more the norm by the sounds of it over the summer, across tube, trains, airports, and wherever else, right, then I think it really is going to potentially start getting nasty. I think there may be sort of, and I hope obviously this doesn't happen, where we'll have sort of forms of social unrest, right? And, as I said, I hope I'm very wrong, but, I think after the 2.5 years we've had from a COVID perspective, then go into a summer or, second half of the year of sort of industrial action, I think it's testing it's going to test the population to the very limits, to be honest.
I hear you. A summer of discontent is the popular expression.
It feels that way, yeah.
I mean, if it's your perspective is very interesting, and I think it's one of those, so you one of the kind of the recommendations you were making, and you just, again, to preface it, this is not financial advice, and you made that comment as well. You said, I would be long dollar. Would you be long cash as well?
Look, I think long cash because the opportunity is going to potentially be there, right? So, listen, my late departed mother, she always felt that the best, best thing you can invest in is real estate and property, right? Because you can go and touch it, you can go and feel it, you can get utility from it, right? So, I'd be happy to be long cash, to look for opportunities in the market, which I currently am doing so, to buy real estate for sure. Right. Because, I do think there will be some pain there, right? Mortgage rates, as I said, 6.5% in the US now, right? For 10 years, right? We've been at such low levels that all of a sudden you're now in an environment and a market where people do not know what it is to see rate hikes, right? So, and there definitely probably still is an element of over leverage in the economy, which I think will then cause affordability issues, which then, if you have the cash, presents the opportunity for you potentially to go and make some pretty good deals, right? So that's the way I'm looking to do it. And as I said, this is purely from my own sort of personal perspective. because I think, the deals are there and will be there to be done over the next 12 to 18 months, right?
The last time I was in London, we and still are looking at a potential real estate transaction in Canary. And and so I went and had a look at this particular asset, and you meet with the agent, et cetera, et cetera. But I noticed the rates of vacancy right across the way where the big kind of banking complex was, and and I was like, your price point doesn't reflect the level of activity here, even though they've opened up that Elizabeth line, right? I still think that they're some time away from kind of seeing the occupancy rates that they were expecting. So, then it becomes, because in that environment, as you know, where there is an oversupply, it's a buyer's market. So now we're, having the conversations around, I don't believe that this price point reflects the true value of this asset right now. And so it's the age-old Mexican standoff, right? Who can hold on for longer? Can the developer that has put capital into this thing and has been waiting on it for the 5 years hold on for an additional 3 to 4, which is not unforeseeable given the rate at which sales is happening in that environment? Or are they going to go? I just need to create liquidity in the system. I've got some short-term loans that have come due. Let me flog these things and get rid of it. And last time I remember we spoke, you said, Vusi, expect this not only in resi, but expect it in commercial and expect it in industrial as well. Absolutely. Right? So I think very, very exciting.
Where did they say their occupancy levels were back? It's sort of, obviously post-COVID in Canary Wharf, where we saw.
I didn't trust the number. They said 78%, and I was like, nah, I don't know about that.
Yeah, I mean, look, I think even if I speak for myself, I don't mind working some days from home and then commuting the others, right? So even if I'm in the office 2 or 3 days a week, right, that's half my time. So do all of these corporates need that much office space for people who maybe come into the office 50% of the week, or do they go to a hot desk model where you're in and you find a desk and you just plonk yourself down for the day, right?
I'll give you an example, right? One of the lead indicators, sorry to interrupt you, Ali. So one of the lead indicators, I was having a conversation with a friend of mine, Barry. He runs a very interesting business, which I don't even want to mention in this conversation because it just wouldn't be age appropriate. But he runs a classified business for escorts, right? Very successful business. As you can imagine, he doesn't have demand issues here. He has a market matching supply problem. And so Baz and I did our EMBA together in London. And so that's kind of how we became friends. We kept in touch. He's a lovely guy. But so anyway, I'm telling him about this transaction I'm doing. He goes, hold on. He says to me, why don't you look at the vacancy rates at kind of these hot desk platforms like WeWork and the rest of them? I said, why would you recommend this? He says, because we were at WeWork and they were charging us WeWork prices in its heyday. And he says, let me tell you, we're like 25, we're now paying 25% of what we were paying at the WeWork, and office infrastructure that's better. And it's right across the way. It's in Holborn, right? It's right across the way from where WeWork has had their space. And so I did. Got a hold of a couple of guys and I was like, just give me a sense of what's happening, the unit economics. And it's unbelievable, the attrition of value, because they obviously went and took up all of this space and long-term leases on the assumption of economic growth that's going to be a steady line constantly north. But markets are, by their very nature, markets create asymmetries and that asymmetry creates assimilation opportunities. So you've got to wait for the market to kind of rebase, right? So I say that only to make the point that just to support what you're saying, that if you're sitting on cash at the moment, you have the opportunities to go and acquire, you have the opportunities to go and buy, because I think there's going to be a lot of distress selling happening in this market at the moment. Ali, with your permission, I want to talk a little bit about the global political macros at the moment. I mean, what a world we're in. And you highlighted at the beginning, so let me just rehash some of the comments you made. What's happened in France with Macron, right? Even though he retains the presidency, he's now below what was the outright majority, and there are a whole host and that movement, that right movement that was always there, has just gathered so much steam. You remember the protests of the yellow vests. It was 2 years ago, thereabout. These guys were seen as outliers, and now they're in the political mainstream, right? So that's happening in France. You mentioned what's happened in Colombia. I mean, who would have thought that you would have had in Colombia a leftist president, comes from a business background, but emerges now into the space with a populist message that we really haven't seen in the mainstream of of politics in Colombia, not since the past 20, 25 years that I can remember. But more importantly, the Biden issue, that he not only falls off a bicycle in Delaware, but he literally is having his popularity ratings decline. All of this in my mind. And by the way, you want to talk Africa? Man, we could go on. As I speak, in South Africa right now, the trending hashtag is that the president must go for several reasons. And that is almost identical for many of the Southern African countries. I don't want to mention names because I do business there, right? But many of the Southern African countries, the incumbents just don't have it used to be that the incumbent had an advantage coming in. It now seems to be the inverse. So there's clearly something bubbling there. And it's a factor of all of these things. What's happening in the global commodity space, geopolitical space, Russia, Ukraine, US, China, and all the rest of it. What that means in terms of people's ability to put food on the table at a price they can afford and keep their houses on and the gas pumping and their families warm in winters without having to pay, unbelievable rates. For businesses, it means how do we stay competitive when the cost of doing business is high and the cost of labor is also now beginning to push up because labor is going, we can't live on these wages that we're being paid. That global rebalancing and rebasing. So here's the question I have for you. I'd love for you to do what Ali does really well and give us that Ali crystal ball and throw this thing forward 12 months from now. And talk to me a little bit about where do you think in 12 months the global political agenda will settle? Do you believe that we will continue to see the rise of the alternative, the rise of the right and the left rather, and the rise of the populist movements? Do you believe that capital will once again, reestablish itself as the authority in how to run markets and how to run economies, and that we'll see a move back to a free market capitalist system? Or do you think that we're going to be in kind of the schizophrenic limbo space for the foreseeable future, certainly over the next 12 months? And of course, the reason I ask this is because watching this conversation are either clients of ours, as you know, at Squared, or people who want to be clients of Squared, who need to have some sort of taking a perspective about where the global economic system sits and where that presents opportunities for them. So the Ali kind of fortune teller.
So look, my personal view, I think we stay in the limbo, right? Because it feels to me that this hasn't just started now, right? It started with Brexit, then we had Trump in quick succession, and I think that was sort of the flashing lights moment, right? And I think with everything that we've seen over the last 6 to 12 months, right, that's only going to get worse in terms of people seeking alternatives for a better, or what they perceive or what they're promised to be, have a better life, right? And I think that is where sort of that populist vote sort of really starts gaining traction by those who can promise what people are so desperate to have, right? And, if you're out of options, you're going to, roll the dice and say, okay, let's see what you can do, right? So it would feel to me that I think from here we get to a point where, it probably gets worse. And then we see how we go, right? And again, I'd caveat that with, how soft can the landing be from an economic perspective or from a recessionary perspective, right? And is there a silver bullet, i.e., China at 7.5%, 8% for the second half of the year, right? That can start easing those pressures. But I think, so I don't think I've probably answered your question, because I think I'm still trying to make up my mind which way we go, which is why I think we're still, looking at a limbo status.
But, phenomenal. I mean, this is why I always enjoy our conversations, right? Because it's kind of the trip down all of these macro issues and ultimately kind of what they mean for the individual watching this conversation, who really is just looking for an opportunity to create a little bit of wealth for themselves and potentially a little bit of extra income for their own families as well. Unrelated question, Ali, we didn't discuss it, and it completely unrelated to our masterclass. So it's going to be a bit of a left field question for you, but it's an important one, I think, thematically. So Chadwick Boseman, as you know, played Black Panther He passed away tragically due to cancer. And my understanding is that his estate was around $3.8 to $4.8 million there or thereabout. And shock and horror, Chadwick Boseman had no estate planning, no trust, no will, nothing like this. And of course, the state then had to intervene in the distribution of his assets post his life, right? It's natural for everybody. If you don't have a document that details how your assets must be treated at the end of your life, the state is going to have to intervene. The reason I mention this is we're dealing here about getting people to participate in financial markets. But there are, with the greatest of respect, and I say this with respect and humility and without apportioning any bias or prejudice, there are certain cultures to whom certain behaviors in the market just are foreign. You know, the idea of saying to somebody, you need to get your estate planning in place. I know for elders in my family, the minute you have that conversation, they start thinking, do you want me to die or something? You're trying to take me out? What's the story, right? And I know it's similar to in kind of the Asian community. You know, you go to your father, you say, Dad, he goes, no, I'm going to be here for a while. You're not getting my shop just yet, right? And the broader question here is around how do we improve the culture of understanding the importance of financial planning for your life in general? For you, in your life, with your own family, and also with your own experience with a mother who told you, put it in property, because if it's a hard asset, you can touch it and feel it. What has been your experience around how we can help our people better improve understanding the importance of planning your life financially, and then understanding the opportunity of being a part of the financial markets? What would be your general sense on this?
So look, I think you and Philippe actually touched on this a couple of Saturdays ago, right? Where, you know, I remember watching it and it sort of resonated, right? Where we're looking now at a question of, you know, education, right? Being able to sort of educate as many, or being able to help to educate as many people as we can in whatever we do across geographies, across continents, in all aspects of life, I think is the most important gift that people in your shoes or our shoes that we can possibly give to the societies in which we operate. And, you know, for us, it's definitely something that we've been looking at on our side at Squared as to, you know, how can we help educate and help people to become more financially literate? And what will that involve? What will that entail in order to sort of put something out there that is credible and helpful for people with varying degrees of knowledge, whether it be nothing at all to, you know, fairly sophisticated investors? You know, how do we sort of make that happen? So, you know, we're constantly sort of discussing that internally as to what that looks like from our perspective. And obviously, you know, with this in mind, you know, you'll then have, you know, varying degrees of levels of education where you have people sort of, I wouldn't say graduating, but sort of progressing up the curve in terms of the sophistication and understanding, right? To then sort of realize at that point in life, what do they actually need in order to be able to ensure and maintain, you know, the relevant sort of, you know, inheritance planning for their children to ensure that, you know, heaven forbid anything happens to them, that their wife, children, extended family are looked after, right? Yeah. So I think that is the most important thing that people in our shoes can do in order to sort of, you know, help those who we interact with in such forms as this. We've just, in short, the onus is on us, right? You know, you can do what you can do, we can do what we can do, our networks can do the same, and all of a sudden it's a significant impact.
And, you know, just to be clear, you know, I think one of the challenges, right, is that certainly from personal lived experience, one of the lessons I've had to learn is the greater the sum of wealth you want to accumulate, the more intentional and deliberate you need to be about how you get there, right? So I always say to people, wealth is an outcome that is accumulative. Wealth is not an achievement. In other words, if you win the lotto, you achieve something. You get a lotto, you scratch it, boom, you know, it's a luck of the draw. But wealth is an outcome and it's cumulative. There are things you can do in your wealth journey to lead you to the outcome. Now, it isn't to say that the quantum of wealth you accumulate will be the same between Vusi and Ali and so, but it is to say that you can be deliberate about making sure that there is some safeguards there, right? I mentioned this only for the following reasons, right? That we're talking here about playing in financial markets and understanding wealth creation opportunities, but there is no point, as we say in trading, taking profits off the table if you don't put those profits into a structure that protects them for your future. If you're generating additional wealth purely for the purposes of consumption, you're missing the point about what this can do for you here. This is really about how do you create leverage for yourself and your time and your skills and your networks, right? So we've touched on a lot here, and thank you so much, Ali, for opening us up with that incredible summary of kind of what's happened over June. We spoke about the S&P 500 being, what is estimated at worst since the 1970s. You spoke about the China plan, the Shanghai Composite. You spoke about this 5% target plan for the growth in China. President Xi's game plan for that economy, and he clearly has a game plan. We spoke about Russia, the Ukraine crisis, the cutting of gas, what that does to the rest of Europe. And attached to this, you told us a bit about this is actually a lived experience of what's happening in the UK, some of these strikes and moments and instances of unrest. But listen, Vusi, it's not just this, it actually extends to the rest of the continent as well. This is what we're seeing in France, in Italy. I mentioned the issue around the drought. We know the challenges that have been happening in Spain and a whole host of other economies in that space. Then you take us across the Atlantic and you say, by the way, in the US, here are the dynamics here. You might actually have orange being the new black, coming back to orange again if Trump decides to ascend into office again. And there are questions around Biden's popularity at the moment. There was one point you made. We didn't get a chance to double click on it, and I'm cognizant of our time. Crypto, right? Clearly in bearish territory. And every time I actually tweeted the other day, I said, please stop calling the bottom of crypto. Because every time somebody calls a bottom, it's almost as if crypto goes, really? Hold my hands. Let me show you what I can do here, right? What's your view short term over the next month or so of where you think the crypto ecosystem is going to end up? And for context, of course, CZ at Binance has announced that they're talking to over 50 different crypto platforms and projects about acquiring them. I tweeted the other day that Binance is the Fed of crypto. And between CZ and FTX, they've also had projects around how do they provide liquidity into the system to keep the system running. What do you think happens in crypto over the next month or so?
So look, you know my views on crypto, right?
I do.
And as I said, I like the technology. I can see the use case for crypto, but I still think we have another leg lower. I felt 17,000 in Bitcoin was doable. I think that probably now looks at something between 12 and 14,000 as a low, right?
Sure.
I think what's been interesting actually is all of a sudden you've seen people looking to sort of go short USDT, for example, right? Which is meant to be the crypto peg.
Man, that made me so uncomfortable.
Absolutely, right? So, and I think that suggests that there is still more to go, is my feel. And it could just sort of, snap low and come back. Absolutely, right? But the pain that may cause as a ripple effect across the crypto space, right, could be significant, right? So, I do think there will be a space for crypto, absolutely. But I still do think we're finding our feet as to exactly what that landscape looks like. And for me, there's still more pain to be had there. So I definitely think, at least one leg lower, right? And look, if you are going to see, risk assets still sell off, right, which is my feel, then you have to see crypto still sell off, right? It's almost, again, that comes back to the correlation point a little bit earlier, right? If you look at what crypto's done, it's pretty similar to what the S&P's done, right? And actually, when people were preaching crypto, right? The view was that it was meant to be the opposite, right? It was meant to be a hedge, right? So I think that is, for my feel, still another leg lower. And then I probably look to start, using that cash pile that we sort of discussed earlier and deploying, and I'll be significantly happier buying Bitcoin at 12,000 than on a 60,000 handle.
I mean, full disclosure here, but Bob, Bitcoin, I've basically liquidated all of my other crypto holdings and put them in USDT. I was like, let me just, because in my mind, USDT is like, that's the hedge, just leave it there. Whatever happens with these projects, this is constantly the peg. But to your point, and I think you're absolutely right, when I started seeing conversations happening around the shorting of USDT, I thought, well, this is it presents to us the reality that even though crypto was built with a thesis of being the alternative to the global financial market system, that actually it is now deeply embedded in the dynamics of the global financial market system. And I think this is the lesson for all of us, that the comment you made, and I just want to support this comment because I think it's such a profound point, that we as investors need to be able to separate the technology from the financial promise, right? That you can back a project because you believe the technology is sound, the use case is legitimate, and it's solving a real problem. But you need to be able to separate this from whether or not a particular token or coin or whatever the case might be is worth holding as an investment opportunity, in particular, given whatever time horizon, whatever risk matrix you use, right? So yeah, thank you for that. What a session, my friend. What a conversation.
As always. So start of every month. This is the plan now, right?
Yeah. Beginning of every month, Vusi and Ali, make sure you catch us here. We do a markets wrap of the month prior, and we look forward at the month going forward. If you need any, conversations, you want to understand the macros. Again, what we offer here is not financial advice, but it is, as I said, when we first had our first conversation, these are the kind of conversations we have. So it's like a natural extension for me to go, these are actually really illuminating conversations. And I really think that my community can draw a lot because, Ali, again, I think you've got so much to offer in terms of what you know, that there's a real opportunity for us to educate everybody else out there. And we don't take for granted your time and expertise, my friend. So thank you so much.
Pleasure. See you soon.
It was good to connect, brother. Regards to the family.
See you soon, bud.
Good man. Take it easy.
Bye-bye.
All right, everybody. Well, that was that. I hope you guys enjoyed that. Please make sure that you hit us up with your comments and let us know what you think of this. Also, if you can, let my team know kind of in the comment section what you would like us to discuss in the next session, myself and Ali. I might bring Philippe back because I saw Philippe was actually very, very popular with you guys. I think it was the comment around the Ferrari SSUV. So I might bring Philippe back as well, but we'll see. Time allowing, I'm on tour, I'm busy capital raising and a whole host of other things. So there's constantly, moving dynamics around my time, but it would be great for us to do something. So what am I saying? Thank you so much, guys, for joining this conversation. Hope you've enjoyed it. Leave us with the comments around what were the top 3 things that for you stuck out about this conversation. What did you learn that you didn't know? And what are you going to do forward? Please don't forget that this segment is sponsored by one of my portfolio companies, SquaredFinancial. So please make sure that you go to SquaredFinancial, open an account. If you've already opened an account, go and fund your account and start trading. That'd be great. And again, everything we offer here is not financial advice, but us really just trying to make sure that that you can become part of the global financial market system. I learned at a very early stage in my life that there's money you work for and there's money that works for money. All right. And so part of the wealth creation process was not just that I would work for money, but I would learn how to get my money to work for my money so that my money, in effect, births new money. And the financial market system is one of the most effective ways to do that. Be careful out there. It's a jungle. Take it easy. Ciao.